Hey guys, welcome to the second week of September. I hope you guys have had a great first week. What volatility we had this week in the market. I will get into the index analysis before we do the watch list, but if you haven't already, check out my latest blog post. Amazing stuff. Happy to share because you know, this sort of stuff can change how you trade. And also this week I'm going to be working with Dan from TrendSpider, and we're probably going to do a live demo online if you guys want to log in. Let me know what evening you think would be better. I'm thinking maybe Wednesday evening would be really good. So anyways, so here you can see we have basically what TrendSpider will do is I have it set up to the 60-minute versus the daily. So you can see trend lines that are going on for 60 minutes versus the daily. You could change it here from daily to weekly chart, and you can see the different trends, what's going on for the day versus the week. You can see that, okay, we came and we touched this trend line here, and that the solid lines are the daily lines, and then the hashtag lines are the hash lines are weekly. So you can see, okay, well, we're really testing a level right here. And if it breaks down, then it could likely go here. And this is sort of a heat map of the volume as well. So it looks like it could even go down further to 284.63. Looking at IWM, we can look at it on the analysis here too, that if we break through as well on the trend, you can see, oh, we came up, we didn't quite touch this trend line, but look, we've got this weekly level right here, we've got volume, so it could potentially go to 168.25. And then if we go to the NASDAQ ETF, triple Q, you can see, same scenario, that they're in the downward movement. NASDAQ looks like it hit a daily trend line, and it could bounce up here further, or it could continue on down here to the area of 176. So we'll get over, as always guys, you know, this is my personal opinion. I was a licensed Series 7 registered broker basically, but I let it expire. So this is all my personal opinion. Please do your own diligence and due diligence and trade at proper risk management. So here we have the weekly SPY, the daily SPY, and you can see this downward trend here, upward trend here, and we broke some crucial levels around here, and now it looks like it's pulling back. The 4 EMA, which is pink, has crossed over the 8 EMA, and it looks like it's coming down. We closed below the 15 EMA, so it looks like this could come on down to test this upward trend here of 284.30, and that one I drew on the weekly chart. So I'll back it out on the weekly chart. You can see really it dropped below it 2 weeks, and then since that it's been pretty much upward trending since we had the drop back in January from here. So it's upward trending, and I would look for the SPY to potentially pull back a bit more this week. You know, it looks like we've had selling. We had a bit of a rollover on the chart here. We also have QQQ, NASDAQ as well. So on NASDAQ, you see these black lines here were breakout levels. If you look on the daily chart, broke out here, went up, hit this level, pulled back, tested the upward trend line, tested the upper level trend line, and then ran up to a new high. And now we're pulling back from that. We did break this breakout level right here, which had flipped to be support, and now it's coming back down. It could potentially test this level here again at 178.14. So no coincidence that TrendSpider is saying 178.25. IWM as well, let's check it out. So we've got our daily, we've got this first breakout resistance level here and a second one right here. So it's been bouncing off this upward trend line on the daily, broke out, ran up, pulled back, broke down through the support, and almost touched the upward trend line. And it opened right at that support level and ran up, a little down, and ended up slightly up, but still below the EMAs. So overall, it looks like we could potentially have 2 to 3 days of downward trending this week. And then if it breaks the upward trend lines, then it looks like we could fall down further, obviously, on all the indexes. But keeping that in mind, you know, when I create the watch list of the longs and the shorts, you know, these are stocks that were more than likely to be volatile the next day. It's not a guarantee that if I say it's going to go long, it's going to go long. You have to wait for that resistance level to be broken. Just like a trend line, if that resistance level is broken, and you have volume behind it, then that's going to create the momentum. Or the flip side, if you see that one of these stocks that was potentially on my long list and it breaks a support, then and there's volume behind it, more than likely that's going to be a pretty good short all day because you've got the momentum of that volume. So definitely pay attention to the volume, which is very crucial in day trading because you want to see first the volatility and second the volume. You don't want to go against a freight train of momentum. You want to go ahead and keep on that same path. Okay, so getting into the list for the week. First on the long list, we have Xenon Pharmaceuticals. I'll ignore these down here. We'll just get rid of those. So we've got, we'll pull it back on the 15-minute. So I would say 1425 for support and resistance of 1590. This did have a major upswing on Friday, pulled back, and it looks like it found a bit of support here, which was the pre-market high on Thursday. This does have 11 million in the float and 45.20% short float volume on Friday. As you can see on the year, as always, guys, I like the ones that are breaking out. So this did break out, and then it came back to that resistance of the prior day. So look for it to potentially move up further. If it does move up and there's volume behind it, then it could be a very good long with the lower float. We also have MCF, MCBC holdings. So we have here, this was the prior resistance level. Came down, gapped up and ran up. You know, it opened up here, pulled back to that resistance level. A lot of buyers got in, probably shorts that were looking to hopefully, you know, close at their stop level. And then it ran up to, I would put 35, which would be higher than the 52-week high because I would want it to break out against that whole number. And then a support level of 33, 34. And it has 16.9 million in the float. It was 32.8% short float volume on Friday. Next, we also have Costco. So we'll do the 15-minute chart. This one has been upward trending, upward trending, upward trending. You guys have seen this a bunch on my watch list lately. If you guys get my email watch list, which if you haven't seen it already, right there on my blog, CJ and Trade, it's roughly $1 a day. Neil Patel has just like relished in it. He's like, this is amazing. These stocks are so volatile, great for day traders. You know, it's not a guarantee that if I say it's a long or a potential long that it's going to go that direction, but there's pretty much a guarantee that these stocks are going to have movement throughout the day, which is crucial for day trading. So you've got resistance of 243.17 and support of 239.76, the pre-market high right here on Friday before it broke out, which you can see. Again, look at those pre-market high levels because that can be important as far as algos that are trading, computers that are trading. Other people are looking at these levels, and when that level is broken, boom, you have the volume coming in, right? So here it is. That was the second 15-minute candle. Look, second 15-minute candle, more volume, surges all the way up. And then these are probably the shorts getting squeezed. And then it goes up here, 11:30, pulls back, just like the market did as well on Friday. So this one I have, it has 431 million on the float and 44.34% short float volume on Friday. Again, if you look at it on the yearly chart, you can see just upward trending all year. Next one, we have MSL. So we'll look at it on the yearly chart. You can see, all right, it's got, you know, a nice little cup and handle right here. So I would look for a support level of 1560, resistance level of 1575. We have massive volume. So there's probably going to be a nice big movement coming into it as well. If we look at the 15-minute chart, basically, this one went ahead and, you know, came down to 1530, and then it touched all the way up to 1575. Not a big move, it seems like at the moment, but it does have 11.4 million in the float. It was only 8.6% short float volume on Friday. So to me, that indicates that there's more people going long on this stock than there are going short, because obviously only, what, 91% were buying and 8% were selling short. So therefore, many people are thinking that this is going to have upward momentum and break out. So keep that one on watch. We have IPDN, Professional Diversity Network. Again, this one's not at the 52-week high. However, if we do look at it, let's go ahead. Support is 313, resistance of 385. When we look at it back on the yearly chart, you can see right here, it is testing this level right here. So I would look for it to break above 4, really. You know, 385, yes, because that's what the high was on Friday. But I would look more for a break of 4. Really, the whole dollar for smaller stocks can be a bigger resistance level. It does have 927,000 in the float. So you see back here, this has been a prior spiking stock. And then obviously people are taking profit. So if you get into this one, please be careful because it can run up very quickly. However, just as fast with those low floats, when it runs up, it can drop. So you can see the volume isn't quite where it was back here, but we do have more upward momentum. And it would need to test, again, break out that 386 and 4 level before it could potentially, you know, go exponential. The high of this spike was 430, so you could get a good $1.30 out of it. Or excuse me, not $1.30, 50 cents. That's got to be higher than 430. 663, there you go. So we could get almost 100% out of this one if it does run up and it has that great upward momentum. On the shorts, the first one on the short side, SPB, Spectrum Brands. So here, we'll bracket out to our 15 minutes. Again, broke down through the support here on Friday and continued on down. I would look for a support level of 82.56, resistance of 83.79. And on the year, again, we are not at the low of the year. However, it did break really this support area, and it looks like it can continue on down to 79.50 area if that level breaks down to 75. So we could have another $7 move to the downside if it were to even continue on down further, down 67 before I would think that it might have a bounce to it. SPB does have 20 million in the float, so careful because those can go against you as well since they're lower float. AMAT. AMAT, I have a support of, oh, here we go, let's lift it up, 39.71, resistance of 39.95, and it has 998 million in the float, so that's a pretty big freight train when it starts picking a direction. Had a massive day on Thursday, second day continuation down, and when we look at it on the year, it did break new 52-week lows, and you can see if we look at the 5-year, where are we standing? It is at a support level right here. So there could be some buying volume coming into it. It does look like we had some pretty big volume there, but keep on watch because it could continue on down further down to 38.50 and then potentially down to 37.50 from there. Next, we have TAP, which is Molson and Coors Brewing Company. So this is the weekly chart. Let's pull it back to the 15-minute. Massive down day on Friday. I would look for support level of 63.52, resistance of 64.05. It does have 180 million in the float. When we look at it on the yearly chart, we do have this support level that I think it could go down and test, 62.45. After that, it might go down to 61 area as well. And they did just have a dividend release. So, you know, that probably started the downward trend, and then it's just been downward trending overall. It's never been able to break up above that support level, or excuse me, resistance level up here. And it looks like it's got some downward momentum to it. So keep that one on watch for the week as well. MHLA, which are going to be notes, maiden holding notes. All of the maiden holdings have basically dropped down on Friday. This one has 4.4 million in the float, so therefore that's why it had such a big drop on Friday. It says, you know, 2.2, that's 12%. That's a pretty big drop for this holding. So I would look for a support level of 15.30, resistance of 15.8, and keep it on watch because that is the low of the year. I'm not sure if it's 5-year low altogether. Yeah, all-time low for it. Well, they were just released out June of 2016. So this one could continue lower, all-time low right now for it. And they have 4.4 million, like I said. RGLY as well. Excuse me, I mistyped it. RLGY. So Realogy Holdings, we'll go to our 15-minute chart. And we have a support of 2050 and a resistance of 2023. close to the low of the year. However, it did not touch it on Friday. So keep watch for that 20 cents drop below there. And you can see it basically has downward trended. Could be at a double bottom here, or it could go ahead and continue on down further. It also depends on what the indexes do. You know, when the indexes are green, it seems like it's much easier to go long. All the computers are thinking, hey, let's go with the movement of the index and go ahead, because many times we are competing with the computers trading algorithmically and everything like that, and they're all looking at pivot levels, they're looking at EMAs, they're looking at past resistance and support and trend lines, and that's the way that the computer programs are written. So it's really important to keep all that information in mind when you're trading as well. This does have 118 million in the float, so keep it on watch. And potential longs going into the week. We have tech data. So this one had a massive drop down, and it had earnings, and then it looks like we might have found a bottom down here at 70.70. So, you know, we had a massive second upward trend day here. So keep it on watch. You know, if you were to get in here, I would say keep that 70.50 level as your support. But look, you've got $108, so 50% of the price to the upside potentially, versus, let's go ahead and just do it this way. I love this little thing. So if you were to get in, say, close here, I would put that as your stop. And if it would need to break this resistance level here of this candle for sure. So you're looking at, okay, potentially $2 or $1.90 to the downside versus $6 to the upside. So you're looking at about a 1-to-3 ratio there. And then if it were to continue up, you could go ahead and take partial profits. Then I think, you know, you're looking potentially next resistance to be tested of the gap, $83. So you could make a nice $10 off of $2 of risk here. So keep that one on watch for sure. We also have AA Alcoa. So metals have been really getting beaten down. Let's go ahead and do that risk reward management as well here. Okay, so we've got this one here. So we put it, you know, really the low of the year down here at $40. We're at 41, so $1 risk. And you can take it up, see, I would say probably the resistance level that it would be a good partial exit, 45. So we're looking at a 1-to-4 ratio here potentially for that one. And if we do Baidu, I have that on the long list as well. So I would say, okay, hey, if we get in here, let's see, I'll do it quickly over here. I love this little long position holder. And I do say long because, you know, many people are, I want to do it now, are more long biased because not everyone understands the shorting capacity of shorting stocks, and not every account can do that. Like if you're trading in your 401k and you're looking to grow it, then you can't go short. You can only do long trades. So I would say here, okay, entry 216.04 right at the close. Maybe put it the low of the year, 207.95, and then 227. So this one's, you know, it's more like $9 to the downside and $10 to the upside. So risk reward is not the best here, but you could keep it tighter and say, okay, well, I'm going to just go and hold it to the bottom of this candle over here. Let's see, this was 211.98, which coincidentally is a little bit lower than here. So $4 to the downside versus 10 to the upside. That would probably be a better risk reward rather than the low of the year. All right, and MTCH. Looks like we are in a nice breakout area. Let's see, let's remove this one. Oops, undo that. I love this. Okay, so we've got this. We'll just remove this Fibonacci. So we did break a downward trend line here. It gapped up, running up, have a resistance line here, 52.27. It broke above it, pulled back, ran up a little bit. So this, if it does break out here of 52.85, I would look for continued upside of the move. You know, draw a quick upward trend line here. We got an upward trend. We got a bit of a downward trend. We have a nice little resistance line here. So as long as we can go ahead and break above here, go ahead and break above this, and we have momentum and volume. That's what's so crucial. We need to go ahead and see it continue on up. Then, you know, really, we'll go to a 5-year chart here. The trend lines might not look so nice, but you can see it definitely has the ability to break out and move. You can see here we broke that trend line, there was volume behind it, and it ran up. So that's it for this week, guys. If you like my content, please like and subscribe and shoot me over comments. Always happy to help. Still looking to create that video content of educational stuff for people. So please shoot on over what you would like to see. Have a great week ahead. Carpe Profit.